afterwards, I will read and respond to your questions and go over any daily and weekly charts of whichever tickers you guys are playing. So let's get right into it. First, the webinar outline. I'm going to go over my experience and why you should care what I have to say. Some red flags in Pennyland, things to look out for. We know it's the wild west of trading stocks, and there is certainly danger at every corner for any trader or investor. I'll give you some tips on what to look out for. I'll also give you some trading tips, utilizing technical analysis to make entries and exit decisions. We'll go over the most current polls in order to determine what we're going to be expecting here on November 8th, and also if we can determine if the stocks are going to have a sell the news type of reaction or if they're going to see a strong bullish break if we do get some votes passing. And that's going to depend on how clear the decision will be heading into those votes with what the polls show us. Legitimate investments, there are legitimate investments coming up. There's a New York Stock Exchange IPO potentially upcoming. We'll go over that. And then there's the future of the sector that we're going to look at, because we know it is ever evolving and we know the landscape is shifting in favor of marijuana, medical marijuana, and the stock market is going to be a part of that. And then afterwards, we'll do that live question and answer and chart analysis, looking at whatever you would like. So my experience, there I am, Charting Man Dan of thechartguys.com. So back in 2010, I knew nothing about trading stocks. I knew nothing about marijuana stocks, but I did know that the political landscape was shifting, and I wanted to make money in the marijuana and hemp sector. I actually am more interested in industrial hemp than I am marijuana, and did a lot of studying when I was in college on the subject. So I had $5,000 saved up from high school jobs. Figured worst case scenario, I lose it all and I have to get a job right out of school, which is what most people do anyway. And best case scenario, I wouldn't have to do that, and things worked out. So I found penny stocks. I saw very quickly that the people that were posting charts did a whole lot better at determining or predicting what was going to happen. And since then, I've learned that charts do not tell you what is going to happen, but they tell you what is most likely to happen. And it's certainly it's information that you can utilize. So I found penny stocks. I found on iHub, I found a bunch of really awesome, generous people who are willing to share information. And they really took me under their wing. And I was able to learn technical analysis over the next couple of years and utilize that information for trading the penny stock sector. And fortunately walked right into the penny stock boom. 2010 was the start of it. There were only 8 companies back then. I can remember when hemp was PCIO before it had the ticker change, and it was trading at 0.0025 per share. And then it changed its ticker to hemp, and then it hit a top of 30 cents. So a nice, huge gain in terms of watching that stock develop. But I also saw all the scams. I saw the bubble burst in 2014, and I do believe the bubble has burst in the penny stock sector, which is why I'm patiently waiting for legitimate opportunities. I want the New York Stock Exchange IPO. I want stocks that you can stick your money in for 10 years and not worry about the scams, not worry about them being shut down or dilution. And also want to highlight, I have no positions currently. Everything I say is unbiased right now. I don't care if the stocks go up or down. I hope everybody makes money. That's obviously the ideal goal here. But in terms of people thinking that I have short positions, if bashing stocks, whatever it's going to be, I have no positions. So one of the most important things that I'm going to be talking about are the red flags to look out for when trading penny stocks. And that's what I want to point out first. Penny stocks are for trading, not investing. If you stick your money in these stocks and think that they're just going to go up over time, it's really a bad decision, in my opinion, and I will show you why in terms of examples, in terms of the financials of these companies. It's not as simple as thinking, oh, will the company do well? There's a lot more to it. It's the financials, the debt structure, the share structure. It has a ton of impact on whether the stock will do well. And the vast majority of these penny stocks, and again, I'm not talking every single example. There are going to be some stocks that if you put your money in them and just let it sit, you will make some nice money. But I'm going by percentages, and that's what traders go for. And we want consistency and the odds in our favor. And with the hundreds of penny stocks now, again, as I said, they started with 8, and then we ballooned to over 300 penny stocks in the marijuana or hemp sector. And that, in my opinion, is the bubble bursting. Not only did we crash from the 2014 explosion highs, but we have an insane amount of companies now, and companies that have no business in marijuana just changing the name of the company to try and get some hype and attention. So in my opinion, they are for trading and not investing. And the trading cycle, I'll go into it a little bit more in a bit, but there are seasonalities where the voting season and in the fall, these stocks do well, and in the spring and the summer, they just go dormant, and it's just all bear, slow and steady to the downside. So if you are learning how to trade with technical analysis, you're able to get in on the big moves to the upside, lock in your profit, and then patiently wait for the sleeping giant to awaken again some other day. So we know it's the Wild West of stocks. Just an example, back in the day, I don't know the year exactly, it was between 2010 and 2013, I would say, there was a group called Money Runners on iHub, and they would have a bunch of followers. They would load up on a stock. They would put out a release that this is our play. Then a ton of other people buy in, and then they would sell their shares into their members that were buying up the stock price. They were arrested. They literally went to jail, and they did so because they were trading hemp shares back and forth to each other, creating false volume. And they did that to gain traders' attention and to get the stock price mentioned a lot in different articles and then get some hype and get it bought up. So there are literally mugshots of the guy behind Money Runners. I believe he was 24 at the time. I don't know the details how long he went to jail, but I do know he went to jail. It's the Wild West of stocks. These CEOs and the executives of these companies, I cannot tell you how many of them are just absolute scum of the earth. And that's the way I have to put it, because that's the truth. And they are, at the detriment of shareholder value, paying themselves out in companies that are never going to succeed, and they know they're never going to succeed, but they are still cashing in that check at the detriment of shareholders. And I'll show you some examples of some financials and what to look for in the financials that are big red flags. Then in 2014, we had an SEC warning issued saying the SEC saw what was going on in the crazy gains in the penny stock world, and they said pretty much the vast majority of these companies are scams. Do your due diligence, you're going to lose a lot of money. That's essentially what it said. If you don't know what you're doing, you're going to lose a lot of money. Next thing we know, they halted PHOT. That was one of the original names. And I'll call them the OG names: CBIS, HEMP, MJNA, TRTC, GRNH, PHOT. These are part of the original gang of stocks before everybody else, before it was the cool thing to do. They were the first. PHOT was halted. And not sure the exact reason the SEC gave. I believe, issues with their financials. Look what the stock price did. In 2014, when everybody was running, we were up at 77 cents. And then we halted, and we dropped from 50 cents. A month later, we're down at 5 cents. People lost 90% in 5 weeks. And if you were long in this stock and just holding and hoping things would turn around and it'll go up eventually, look at this downtrend for the next 2 years. 77 cents. 2 years later, we're trading at half of a penny. So if that's not a huge loss, people wrote off their entire investment. Complete waste of money over 2 years. Now, it has recovered a little bit recently, but it's just an example of the detriment. Overnight, this stock was halted, and people lost tons of money overnight. There is high risk in this sector, and PHOT was an example of that. You also want to look out for excessive PRs, and both HEMP and CBIS are guilty of this. HEMP, they went through a period where they were putting out a press release every time something happened with industrial hemp or marijuana. Every time some state legislation was getting closer to passing something, it got to the point where it was ridiculous. The first thing that I noticed when I started trading penny stocks, before I knew anything about technical analysis and the way things worked, was, every time news comes out, there's a pop, but then the price drops and I could get back in. So I very quickly learned, the first lesson I learned in penny stocks was sell the news and then buy back later when things cool off. And hemp is an example of excessive PRs, putting out many, many, many PRs, and CBIS as well. Back in 2010, 2011, CBIS was putting out these press releases with the most exaggerated titles about their products curing cancer. And I remember the stock going crazy because of these headlines. But in the end, it was really fishy the way that they were wording these press releases and putting them out, and it was clearly just to drive up the stock price. So now we need to learn the financials. This is extremely important, and 90% plus of people don't know anything about financials when they're looking at these stocks. If you're going long in a stock, if you're trading stocks, you don't have to worry about financials. You're just using the price action and charts and technical analysis. That's what I do these days, and I've been doing that for the past 6 years as my sole source of income. So learning financials is essential for going long, and we're going to talk about now what to look for in these financials. These companies do not have, the vast majority of these companies, and again, I'm talking in generalization. You can obviously find little examples, that are going against what I'm saying, but the vast majority have no profit. They have very, very little income. Their expenses are much greater than their income, and so are their liabilities. So these companies do not make money, and to make money and to pay their executives, they issue shares in exchange for funds. So they issue shares to keep the lights on in the office, and they issue shares to pay their CEO and their CFO and everybody else because they're not making money. And what that does is creates dilution. So convertible debt is when, here's a brief little example. Let's say I'm a company and I'm making no money and I need $100,000. I will give you 1 million shares of my company, and it's usually priced at a significant discount, usually about 60% of the average trading price of the last 2 months, and that's just a really rough example, but that's usually what it is. And so let's say my stock price is trading at $1, and I will trade you 1 million shares of my $1 stock for $600,000. So you're getting 1 million shares of a $1 stock. That gives you $1 million, and I get $600,000 cash. As soon as those shares become free trading, and there is a holding period before they do become free trading, but as soon as they become free trading, you as the lender are going to be dumping those shares into the market because you're making profit. It's essentially you lending me money, and then you get to sell those shares at the marked up value, making profit on that deal. So when those shares become free trading, that's when you see dilution hit the market and you see stocks tank big time. So you can see in financials, and we'll look at an example here in just a minute, of when convertible debt, when shares are given, and when they expire. So what is ASOS and RS? Authorized shares is the maximum amount of shares that a company can issue. So let's say my AS is 1 million shares. OS is the outstanding shares. It's the number of shares that I have issued. So let's say I have 500,000 shares OS. My AS is 1 million. That means I can issue 500,000 more shares before I am maxed out and cannot do any more. So to keep the lights on and to keep paying myself, having no profit coming in, I'm issuing shares, and now I've issued 400,000 more and my OS is 900,000. Uh-oh, I'm running out of room. I need to have a reverse split. And what the reverse split does is it keeps the authorized shares the exact same, but it takes the outstanding shares and cuts them in half. So let's say I have 900,000 shares, and it doesn't always cut them in half. It cuts them down. So if I have 900,000 shares and my stock price is at $1, I'm going to say, okay, let's make the stock price $2, and then my shares are only 450,000. And that's how you determine the market cap of a company. You take the outstanding shares and you multiply it by the share price. So essentially, if you're doubling the share price and cutting the outstanding shares in half, the market cap doesn't change. It's a one-for-one kind of deal. So that would be called a 2-for-1 reverse split. Stock price doubles, outstanding shares cut in half. I don't have to touch the authorized shares. Normally, a company would have to get shareholder approval to increase authorized shares to allow for greater room for more dilution. And shareholders don't want that because they know dilution will come if they allow that. So the company can usually go around the back door and do a reverse split. If you see a company doing reverse split after reverse split, it's a huge red flag because you know endless shares are being dumped into the market and it is diluting the value of the stock. So now we're going to look at some examples of financials and some Form 4s. Form 4s show insider buying and selling, and that can be a nice indication as well. So we're going to look at some financial statements now, and I'm going to rip into CBIS a little bit because their financials are awful and scary. And again, I would never short a penny stock. I have no position. This is their 10Q quarterly report, and it certainly looks overwhelming. A lot of financial jargon, hard to decipher. And to the normal person, this is not even worth looking at because you don't even understand what it means. But it is important to understand. Practice looking at these. I've looked at dozens and dozens and spent many hours digging through penny stock financials, looking for little clues and information. So here, this is the 10Q, and we can find some good information. We've got the issued and outstanding shares. I can see there's just under 2 billion shares issued and outstanding, and there's 3 billion authorized. So I can see the company can issue another billion shares before it's maxed out and has to either increase its authorized shares or have a reverse split. So let's scroll down, and I'm going to skip the revenue and all that because I don't care about that right now. What I want to show you is the huge red flags. So let's scroll down. Financial jargon. Look at these. Look at this information. Company issued 5 million shares. Blah, 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 blah. They're issuing millions and millions of shares under an option agreement 2015 equity plan with an exercise price of 1 penny to a consultant under management agreement. Number one, we have no idea what these consultants are doing. So let's just add this up. From February, March, and May, we've got 7 million, 6.5 million, 25 million, 15 million. So that's 40, 53, 63, 73, 83, 93, 115, 120, 38, 150, 160, over 175 million shares issued to a consultant under a consulting agreement. As far as I'm considered, they could be paying off their friends here in shares, and I have seen examples of that in the financials, paying off friends with shares. And look at how many shares, 175 million out of 2 billion authorized. So essentially 10% of the company value has been issued from February to May, a 3-month period for God knows what, consulting under management agreement. And they're issued at a 1 penny stock price. So what's CBIS trading it now on this move? Looking at a chart real quick, we're up to 6-7 cents. So someone can sell these shares now that they received in March. 7 months later, they're worth 400% more. So 25 million shares was valued at 300 grand. What does 25 million shares get you at 5 cents per share? And that's big numbers. Let's go real quick to the calculator. And that's showing me that you are getting now 1.25 million. So they issued it to you for 300 grand, and now it's worth 1.25 million. Do you think that though they're going to be dumping those shares into the market? The answer is yes. All of the retail investors, you and me, average Joe, trying to get in on the marijuana hype, buying these shares, we are buying these management shares. Well, how do I know that management is selling these shares? Well, we have a thing called Form 4. Look at this Form 4. This is from CFO Mr. Kane Robert James, who is rolling in money on this move. And I'm going to show you Form 4 after Form 4 that he has been filing. This is October 10th. He sold 1.8 million shares on October 10th at 2 cents, a little over 2 cents. And you say, okay, he just wants to collect his money. He deserves to be paid. He's the CFO. Here we go again. 1014, selling another 1.4 million shares at 2 cents. Here we go again. 1020, selling 2 million shares at 6 cents, 6.5 cents. Here we go again. We got October 18th, selling 4 million shares at 6 cents, 4 cents. And it keeps going on, and that might all be all I have for James here, but let's add that up. We got 4 million, 5, 6, 7.4, 8.4, let's call it a nice smooth 9 million shares sold from October 10th to October, in a 2-week period in October. He has sold 7 million shares, or I might have said 9 million, I even forget, whatever it is. He is rolling in money and making huge gains, selling his shares to average Joe investor, you and I. And the company, I'm assuming, I'm not going to dig through these financials anymore, but I'm assuming they're not making too much profit. I know shareholders aren't seeing anything in terms of increase in the value of their stocks. The only reason the stocks are going up is from hype, from the votes, and from, like I said, average Joe, retail investor buying these shares up. So you have these big-time money CFOs, CEOs selling their shares into the market, and we have all those consultants getting 25 million shares for who knows what work they did. They're dumping their shares as well. And you better believe that is going to weigh on the stock long term. The stock is not going to accrue and appreciate in value when you have tens of millions, hundreds of millions of shares waiting to be sold so people can just cash in on this money. And this is just one example. This took me 10 minutes to find. I sat down and made this slide and was like, okay, let's look through some financials and see what I can find. First company I look at is CBIS, and that's all staring me right in the face. I could go on for 10 hours looking at all these companies and ripping them apart. Bruce Perelman was the CEO of MJNA before he spun off PCIO into hemp. I met him a year ago. He knows what he's doing. He's doing it really well. He is playing this penny stock game and making big money doing it. He sold MJNA to Michael Yamas. He made big money selling that off. Michael Yamas was later convicted of a felony for his past real estate shenanigans. And it's just a shady, I cannot tell you how shady the penny stock hemp marijuana market is. I'm just sitting here begging for the New York Stock Exchange, NASDAQ, legitimate companies that have to uphold a certain level of moral and, clear financials to be listed, and that's going to be the greatest thing that marijuana investors could possibly see. So Bruce Perelman sells his company to a felon, locks in his money. He paid himself 500,000 shares of MJNA for the idea of the hemp network. I watched this all unfold. I dug into, when there was 8 companies, I knew everything about the CEOs, the CEFOs. I knew their past work. I was just a DD machine. So he paid himself 500,000 shares for the idea of the hemp network. The hemp network never did a thing. It never amounted to anything. It was a multi-level marketing scam that had about a month of some press releases. It didn't do anything for the company. It never brought in $1. And he paid himself 500,000 shares for the idea of something that was never benefited the company. So that just goes to show you the free reign that these executives of these companies have. Another red flag to watch out for is third-party pump pieces. And I'm sure you've seen them. They go to your junk mail, and they're comical. I cannot believe anyone would ever use them, but they do. Here's an example. Penny Stock Dream. GRNH is a top penny stock promoted, blah, 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 closing up. Investors continue massive gains, blah, blah, blah. We're the best. We make all the best money. Follow our picks. And people follow these things. But anytime you're seeing anything like this, whoever is putting this article out has already bought shares, and it's the same example where the company's executives are dumping shares into you. These people load up shares, get their followers to buy in, and then they sell them, the shares, to their followers for a higher price. Oftentimes, you'll be able to scroll down to the bottom of these things and see disclaimer. Penny stock promo was paid $10,000 by a third party to issue this blah, blah, blah to our followers, blah, 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 blah. So essentially, you could have someone load up $1 million in penny stock, give $10,000 to this, pump piece, have them send it out to all of their followers, and then start to sell their shares as the followers are buying. It's a pump and dump scheme. These articles are a huge red flag because that shares are likely going to start hitting the market. So that's another red flag. And if you can't tell by now, there are so many red flags here in the penny stock world of hemp and marijuana. I cannot stress enough, they are for trading. Get your money, get your profit, lock it in, and get out, because keeping your money in long term is very likely to give back those gains. So now let's go to some trading tips. Then we'll look at the current polls and where we're headed going into November 8th. And bring on the legitimacy, please. So here we are with trading tips. The number one most important thing I have to tell you is always have an exit plan. The number one reason people lose money is the stock starts going in the opposite direction and they panic. They don't know what to do. They're going to hold on because they're in it for the long haul, whatever their reasoning is. And it just gets worse and worse, and the sickening feeling in their stomach gets stronger and stronger. And then they're trapped and holding the bag. Always have an exit plan, whether that is an actual stop loss. You need to have a target where you're going to sell and a stop loss level of where it hits. You're out, you're taking your money, and you can patiently wait to re-enter. the stock is not going to explode and run away from you. There will be some instances where you will leave money on the table. There is no such thing as a perfect trade. You're not going to buy the bottom and sell the top. The key is to not get trapped in these stocks. Always have an exit plan. What price is the absolute level where you're taking your money out no matter what? And if the stock's going in your favor and moving to the upside, that level needs to be break even at the worst. It is the best feeling in the world when you are in a winning trade and your stop loss is at break even and you know that the worst thing that can happen is nothing. You stop out of the trade, you don't lose a penny. There's another trading tip. This strategy worked a lot better back when there weren't 300 stocks to be watching. Back when there were a few dozen, the strategy of finding the leaders of the sector and then finding the laggards afterwards. So MJNA and HEMP used to be some of the leaders, and you would see them make a bullish move and the volume would start coming in. So then you look to the laggards, the other smaller marijuana stock names that weren't seeing bullish action yet. You get into those names and then the money rotates, and you can see that happening now a little bit, but it's a lot harder to see because there are so many names. And you can see, you know, one stock will start to sell off and see profit taking, and then a stock that hasn't seen an upside move yet will start moving up and the volume will start coming in. So watch the leaders and find the laggards was a strategy that in 2014, money was growing on trees on that explosion. And you could just go hop from one stock to the next, and you could just see the money rotating in and rotating out. And it was really easy to make money back in 2014. And I don't think that's going to happen again. I have to be perfectly honest. I think back then when there were less penny stocks, the money had a funnel effect where your choices were so limited in terms of investing in penny stocks, marijuana penny stocks, that all that money flowed in a funnel effect. But now there's 300 companies, and it's so dispersed. People say, yeah, those OG names are going to see all the money, those names that I listed, the original names. And that's true. They are seeing more upside than most. But in terms of seeing hundreds of percent gains, thousands of percent gains that we saw in 2014, I think that time is done. And I think we're going to see a funnel effect again, but on legitimate names. And we'll cover those in a bit at the legitimate opportunities that are approaching. The most essential indicator, people use RSI and MACD and all of those. I think the most important indicator is volume. And that tells you, number one, you don't want to be looking at just the number of volume. You want to be looking at the dollar amount. So taking just a rough estimation of what the amount of shares are times the price. So here's MJNA. And let's just use this as an example. So back here today, we had a profit-taking day. The range of the stock was 11.2 to 13.49. So I'll look at that and I'll say, okay, I'm going to take the average right around the middle, 12 cents, and I'll multiply that by the amount of shares traded, 45 million. And that's how I'll get a rough estimation of the dollar amount traded. And that's important because you look back here and you see, you know, 24 million shares traded, but the stock price was down at 5 and 6 cents. So 24 million shares traded now is double that amount of money. So it's not just the amount of shares that matters, it is the dollar amount that matters. And obviously you want to see increasing bull volume to the upside and decreasing bear volume on any pullback. So let's look at another example here, OGRMF. I was watching this one because it was forming a bull flag, and that's actually the wrong ticker. OGRMF, there we go. So I was looking, this is a bull flag pattern. It was starting to play out. Normal, healthy consolidation. Look at those 2 days, or the 2 days of big high bull volume, followed by 2 days of decreasing bear volume. That's exactly what the bulls want to see. So I saw those 2 days. That was on a Friday. The next week I said, okay, I'm scouting OGRMF for an entry early next week. Then Monday came around and we saw an increase in bearish volume. That right there was a red flag to me, and I held off on a bullish entry because that tells me further downside is coming, an increase in bearish volume. Look at the day that followed, a big dump on high volume, and then we have the middle Bollinger Band support, bulls showing up. But the point being, the volume was the indication. Look back here. We had a nice move to the upside, 2 days of consolidation on decreasing bear volume, then the bulls show back up, and we see increasing bull volume 3 days in a row, big time breakout, higher highs. So you always want to see increasing bull volume and decreasing bear volume in your favor on the uptrend. Seasonality, that's what I touched on a little bit. The voting season obviously sees the most hype, October and November, into presidential elections, especially when we have the states voting. Lots of states means lots of hype. It means lots of news coverage. The big pop that occurred back in when Colorado and Washington were becoming the first states, I attribute that pop a lot to news coverage. It was all over the news and all over the internet. You know, the first states are legalizing recreational marijuana, and that brought a surge of volume from average Joe investors saying, I want in on marijuana. Hop on Google. How can I invest in marijuana? Well, your choices are limited. You're pretty much limited to penny stocks. And that seasonality always comes in. And again, spring and summer, the vast majority of the time over the past 5 years has been dead for these stocks. And it's just a slow and steady grind to the downside. Look back at the history. Look at your weekly charts. Look back 5 years on them. Watch what happens during certain months and look for patterns. History repeats itself, and it can be a good indication of what to expect. Emotions, social media, and forums. As we know, the vast majority of social media and forums are full of clowns. You cannot be listening to these people. They are running based on emotions. They are not using charts and technical analysis. The point of charts is to eliminate emotion and let logic dictate your decisions. When you let emotion come into play, you make mistakes and you lose money. It's that simple. Greed kills, and you see greed when people hold on to a position. They're up 500%, and they're saying, oh, no, it's going to go higher. It's going to go up to $5. And then they lose money and leave money on the table. Don't be greedy. Have an exit plan. Let your profit hit your target and take it. So emotions and social media, there are people in the forums that are really worth following. They are out there. They're needles in the haystack. I would say 1 out of every 20 people is someone that you should be following and listening to. You can tell, who's full of BS and who's not pretty easily. Like I said, my mentor I found in the forums, and he took me under his wing, and it was all for free, and I cannot thank him enough for that. And social media and the forums can be useful tools, but you have to learn to sift through the BS, block out all the noise, find the useful information, and use it. And again, eliminate those emotions because they will make you make bad decisions. So the polls and the reactions that we need to be looking at, it's the difference between whether we're going to see a sell the news event into November 8th or a breakout with enough states pass. And what I mean by that is if the polls are obvious in the sense that, let's say, Massachusetts is 60% to pass, then that's going to be factored into the share price come November 8th. If it's like 52 to 48 and then it ends up passing, that's going to get a little bit more bullish action. So the point being, the closer the polls are, if those polls favor passage for these bills or these laws, then it's going to be a bullish reaction. Colorado and Washington, those polls told us that we were going to get recreational marijuana in those states before the voting ever happened. And the polls were accurate enough, and the spread between the pass and the fail was big enough that we knew it was pretty much a sure thing. So the price was factored in before the vote came, and the next day was a very weak move, and it was a sell the news event over the next week. So that's going to be very important. It is entirely possible we see a sell the news event this November 8th. It's important to not think just because these states are going to pass, the stock's going to explode the next day. That's not how it works. Everybody's loading up in anticipation, and they're going to be looking to take their profit. But again, it does depend on what the polls are saying. So now let's look at the most recent polls and what we can expect going into November 8th. So with the current polls here, these are the most recent that I could come across. And if you have different information, by all means share. But these are the most latest polls I could find, and when there were multiple ones in the second half of October, I averaged them together. So we've got Massachusetts, Arizona, Nevada, California, and Maine voting on recreational marijuana. Massachusetts had a lack of polls, but there were some that showed leading, 53.5 to 41, and that's an average. Arizona, 50 to 42. Nevada, 50 to 42. California, 53-39. This is the big one because of the population size of California, and that will pretty much seal the West Coast as marijuana friendly recreationally. And there are also companies that are state specific to California that would see a big boost with that passing as well. And then we've got Maine 53 to 38, but that was the latest, or the least updated poll that I could find was in Maine out of all those states. As for medical, looks like Arkansas, we're not going to pass here. We've got Missouri, it's not on the ballot. North Dakota didn't make it on the ballot, and Florida has to see over 60% or maybe even 62%, but either way, well in the lead, 74 to 22. So what this tells me, what these results tell me is, number one, we're going to see a lot more states legalize recreational marijuana, which is obviously a great sign for the movement. The more states that go through, the more likely we see federal changes on a federal level. But what this tells me is there's none that are really on the fence, and it tells me that these polls are being priced in right now. So in my opinion, we could only see disappointment because we have Massachusetts leading significantly, Arizona, Nevada, everybody's leading significantly. So it is being assumed that these states are going to pass. And if some of them don't pass, then we might see a little bit of disappointment, like I said. But Florida's a sure thing medically, it looks like. And if that were not to pass, it would be a bearish reaction. But again, I don't expect everything to pass that does look like it's going to pass here. But what stands out to me is that there aren't many that are really close and on the fence, whereas if they would pass, it would be a big boost and a big surprise. So this is telling me that most of the good news of the polls is being baked into the prices as we are approaching the vote. So we'll see. Again, this is experience from Colorado and Washington legalizing. The following days after that, there wasn't really a big move to the upside. The next big pop that came was the start of 2014 when we saw the first sales go live in these states after the details were worked out and the news coverage that came with it. That led to a big surge of money coming in and a big pop. So I don't think there's going to be a big breakout after November 8th. Personally, I think it's going to be more likely that we see a sell the news type event. So just something to be aware of and to establish your game plan around if that were to be the case. So now looking at some of the legitimate marijuana investments that are currently out there, the first being GWPH, and I do have a 15-minute video that I made back in May for our members position themselves in the sector. We also have the Canadian sector, Canadian stocks. The Canadian laws are changing and it's in the process of becoming legal. They're still not there yet, but the ball is rolling and it's just being worked out, cutting through all the red tape there to get it going. And it's a much different legal environment than we have, and it's a much more friendly legal environment. So those stocks, a lot of those stocks are in blue sky breakout. And what that means is they're at all-time highs, which means there is no previous price history resistance to act as resistance and keep the price down. The number one thing that a bull wants in a stock is a blue sky breakout due to that lack of resistance and the ease for the bulls to head to higher highs. So the Canadian names that are seeing blue sky breakout are leaps and bounds ahead of these marijuana penny stocks that are nowhere near their 2014 highs and still working on all kinds of resistance levels. You've got bag holders that bought in the 2014 highs, they're looking to sell, and then you've got all these company executives looking to dump shares into regular shareholders as well. So the Canadian sector is one to watch. Blue sky breakout names, and there are plenty of them to be watching. There are lots of companies that are dual listed, meaning they have their Canadian ticker and then they have their United States ticker trading on the OTC or whatever market it may be. TWMJF, OGRMF was one that we looked at. There's a whole bunch of them, and feel free to pass around tickers to each other in the chat room on what you all are looking at most. And again, from here, it's looking into those financials. It's finding names that people are talking about. I would personally be looking at those Canadian financials a lot more closely than these marijuana. I would be investing in Canadian penny stocks long before I would invest in United States marijuana stocks. They're for trading, absolutely, but in terms of investing and not monitoring it daily, look to the Canadian sector until these legitimate investments come around. We already have a couple that I just pointed out, but more and more are going to be coming. And we just had a recent NYSE IPO file. It is still possible that the NYSE could negate them and say no thanks. And Massroots was a company that tried to get listed on the NASDAQ, and they got turned down. But IIPR, Innovated Industrial Properties, Inc., is an REIT, which is a real estate investment trust, and they are in the business of investing in marijuana properties. And they're a new company, so it could still be rejected. If it's not rejected, The IPO could be anywhere from 2 to 6 months out. So we're going to keep a close eye on it. I will be all over these marijuana IPOs. We'll have some live coverage of them when they happen. We'll have a live chat room. So definitely keep an eye open for those. They're going to be big time opportunities. I am going to dump my money day one onto any marijuana IPO on the NYSE. All CNBC has to do is say the word, and we're going to have hundreds of millions of dollars pour into these companies. So what stands out for IIPR is their executive chairman, Alan Gold. And he's one of the big boys. He has taken 2 REITs public, and he just sold one earlier this year for $8 billion. So he knows what he's doing, and he adds a whole bunch of legitimacy to this name if it does get approved and if we are able to invest in this company, which I think will be a good investment. So that about wraps up the presentation, and it's really just a to be continued story here, because I will be back and covering all of these legitimate investments as they do come. I think the IPOs on the major exchanges are the future, and I think there's going to be some really good opportunity there, so we are certainly going to be all over it. Thanks for your patience. Thanks for watching. Now let's get to the charts. And anything that you want to look at. To make things easy for me, if you could cut in and put, that was the end of the webinar anyways, there was about a couple more sentences left there. But basically that NYSE IPO is what I'm looking forward to the most, and all it needs to do is be approved. So for tickers, if you could just put in the actual specific tickers, and that will make my job a lot easier rather than just putting the names of the companies and having me have to find those tickers. So let's start it off. AEZS. And this webinar is being recorded and it will be uploaded, and any tickers that I do not get to, I'll do a separate video for and I'll upload that as well. So AEZS, you can see the big time pullback after a big breakout, and recognizing candlestick shapes can help you obviously with technical analysis. This big upper wick here at the top was an inverted, it's a bearish reversal candlestick. It's an inverted hammer. Then it was followed by a candlestick of indecision. Anytime you're in breakout mode, you want to hold the upper Bollinger Band support and maintain that strength in breakout mode. And as soon as you lose that upper Bollinger Band support, you are more likely to see consolidation. So the red flag that consolidation was coming was back on October 24th when we lost the upper Bollinger Band support, and now we've seen a significant pullback. That being said, it's not a huge volume dump, and on Friday we did see a bullish reversal candlestick off the 50-day moving average support of 371, and we closed up near the high of the day. So that does give some encouragement to the bulls that we could see some upside coming this coming week, and we would need to see a break of 383 and another green day on Monday to confirm this bullish reversal candlestick and to look to head back up to fill this gap. There's a gap right here at 413, so that would be a short-term target. And you want to keep an eye on volume again. I don't want to repeat myself, but 220,000 shares traded on Friday. Bulls need to see an increase in volume on Monday and confirmation of that candlestick. Weekly charts are important to see previous history. We can see we're very clearly in a downtrend and just now trying to reverse that downtrend. So it's good to look back at the weekly chart to find resistance levels. So we can see the top of this move, 559. Then I look back at previous history. Next resistance, I would be looking up at 797, and then the high from the end of 2015 was up at 1570. And also watching volume, it took 58 million shares to get the price up to that height, up to that level, and we're not seeing anywhere near that volume right now. So bulls are going to have to see a big spike in volume to be headed back to those levels. And again, volume is extremely important. We're going to see a lot of tickers towards the end of this most recent week that tested their middle Bollinger Band support and held it. So that's going to be a key going forward, but we'll look at these individual names that you all want to look at first. USMJ is another one. And it looks like USMJ is not here on stockcharts.com. Let's see if I can get it on TradingView. So the daily chart for USMJ, it's a micro penny stock, 0.003. So these are the kind of stocks that see huge gains, but they're obviously very risky. You can see we're trading down at 0.0001. You can't go any lower than that, and that means the stock has a ton of shares, a ton of outstanding shares. That being said, though, every time you see a tick, it's a 100% gain. So back in 2014, I did see some of these 0.0001 tickers make thousands of percent gains to the upside. So it is worth keeping an eye on. They're a lot more tricky to trade, and we can see here we made a move up to 7. I'm just going to cut out all the zeros. Up to 7. We pulled back and consolidated down to 3. And then we're topping out at 6 now, bouncing between 4 and 6. So keep an eye on that volume. We need to see consistent volume. And if we were to pull back and break 3, now that we have consolidated and formed that support at 3, if 3 were to break, that's a big red flag for the short-term bulls. But that being said, we are holding 3, and if we get up and break 7, we'll be looking up at some previous resistance levels. I'm looking at 9 as resistance back in January of 2016, and then we saw a move up to 0.0016 back in December of 2015. So there is some upside potential if the volume keeps up. But again, this is absolutely, if penny stocks weren't risky enough, this is the highest risk, but also the highest reward opportunities. These trips, they call them the trips tickers because they have 3 zeros in front of them. So keep an eye on that volume. 3 is important to hold, and a break of 7 means higher highs are coming. Already looked at AEZS. Let's look at ACB. And another one that's not here. So a lot of these penny stocks are not on a lot of these charting sites here, but it looks like they can be found on TradingView. So just want to make sure ACB, there we go, Aurora Cannabis. So it's very recent, and the good thing about a very recent IPO stock is the lack of the previous price history. So if we see blue sky breakouts, it's very easy for the bulls to see momentum to the upside. So what I'm seeing here on the daily chart is we have consolidation. We formed a low of 196. That's a base of support. Saw a lower high form, but now a higher low. So 196 and 209 are key supports, and key resistance is 238 and then the all-time high of 244. So the bulls want to see a break of 238 and 244 heading forward here, and then it's blue sky breakout and we have no resistance levels. So that would be a great sign for the bulls. If we pull back and break 209, that's a bit of a red flag because we're breaking the higher low pattern. And this is one to watch. This is a new one for me, and I'm not familiar with ACB. Looks like it's a Canadian ticker, but absolutely worth keeping this one on watch because if we break 244, blue sky breakout, really easy for the bulls to see further upside. SPRWF. So SPRWF has been in an uptrend for a really long time. It's been seeing this momentum. We can see other penny stock names that have really been seeing only a couple weeks of momentum, but this is one that's been seeing it for quite some time. So a key support is the consolidation low down here at 766 cents. We need to see a higher low compared to that level, and which we have up here at 90 cents. And now we need to see the bulls break where we're topping out here. 108 is a little double top over the past week. We topped out at 108 on Monday and then again on Thursday. Had a little lower open on Friday, but the bulls bought that dip. It's important to not just look at the color of the volume because you look down here and see a big red volume bar and you say, uh-oh, the bears are stepping in. But if you look at the candlestick action, you can see we opened at the low and closed up near the high. So that volume is all bullish buying, and we did keep that middle Bollinger Band support heading forward. So bulls must break 108 to be looking up at 116 and 121, the recent resistances. And again, if we pull back and break 90 cents, it's an indication that we're likely headed back down into the mid 70 cent range. The weekly time frame shows this move has been in play for about a year now. Big time gains to the upside. We're seeing 1,000% move in the last year. So the RSI is a little overbought, but we did consolidate the past 2 weeks, establish that base in the mid 70s, and now we're heading to higher highs. And yet again, that upper Bollinger Band, we held it as support on a breakout for months, and then when we lost that level of support, that's when we consolidated down into the mid 70s. So we're looking for higher highs and looking for continuation to the upside. And if we were to break that low in the mid 70s, that would be a big red flag. But you can see the lower wick on these candlesticks the past 2 weeks. The bulls are buying those dips. TRTC. One of the more original names. It's been in a nice uptrend for the past 2 months. Nice buying of the dip. This is one of those examples that tested the middle Bollinger Band on Friday, and there's a whole handful of them, and the bulls held that initial test, and we closed up near the high. So we need to see a break on Monday of 50 cents, a little psychological resistance at that nice round number of 50 cents. And if we break that level, we're looking up at 56 cents. That is the high of this bounce. So the low of consolidation did see a big dip all the way down to 42 cents, but again, the bulls did buy that dip. The weekly time frame, nice higher low and higher high pattern, and we did see a break to higher highs this past week on some nice bull volume. We have the bullish MAC decross on the weekly, and this is a much more clear pattern in terms of higher lows and higher highs, but we have clear resistance up at 56 cents. The big upper wick on this weekly candlestick does show some profit taking, and then we have the highs back from March and April to look at up at 746. So 746 is a very key resistance level. The bulls should see really nice upside if that level were to break, but we need to get back into the 50 cent range and see a strong close without such a strong upper wick showing that profit taking on the week. So it was consolidation, and it was some decreasing bearish volume of consolidation before the bulls showed back up, and now we need to see the bull volume increase on Monday and confirm this bullish reversal candlestick from Friday, showing that the bulls are going to head back to those recent highs of 56 cents. CGC, that is a Canadian company, and there is a US ticker that is TWMJF on the OTC. So CGC also consolidated and also bounced off the middle Bollinger Band support. So the pattern has been consolidation, test that key support level, and so far the bulls are passing that test. But what we see here is a tightening range where we have our low of support at 554, the high of the bounce off of that support of 670, and now we're trading within that range. So we can say a break of 554 is bearish, and a break of 670 is bullish, heading back to the high of 735. A little bit concerning that the bull volume is decreasing here, and we're trading sideways the past 2 days, and it's a tightening range. You can see the range of Friday fits completely within the range of Thursday, so you can see that range is tightening, and we're going to see a clear break on Monday, either above the high of Friday, 649, which is a great sign for the bulls, or below the low of Friday, 615, which would indicate another test of this middle Bollinger Band is coming. We did see a bearish MACD cross on the daily, and it was some pretty high volume on the pullback for the bears. You can see the bull volume compared to the bear volume, fairly similar, the 3 days towards the top and then the 3 days of the pullback. The weekly time frame is in full bull mode, and let's just zoom back out to show this blue sky breakout. This is what I was talking about with those Canadian companies seeing no resistance levels because we've never been at these prices before. So the all-time high is up at 735. If we break that level, it's a great sign for the bulls. We had a strong move in August, normal healthy consolidation, and then strong continuation on big bull volume. And we're still holding the weekly upper Bollinger Band. The bulls bought the dip. You see that long lower wick this week, maintaining the weekly upper Bollinger Band support, staying in breakout mode. So this is one to keep an eye on long term. This is one that is worth looking at the financials and potentially making an investment in it in the Canadian sector. TWMJF and CGC.TO is the Canadian ticker. ERBB, I don't believe they're on stock charts either, so we'll go over to TradingView. So ERBB has been in a nice breakout as well on the daily time frame, and it's pulling back a bit significantly. There's a little gap to fill here at 0.0028, and ERBB, let's look at the weekly real quick, or let's look at the monthly and zoom out because this is one of the original names, and it is just dropping big time. Looks like they're having reverse splits, and it's been a complete deterioration of the stock price. There are nice pops, so this is what I'm talking about with these tickers being for trading. They're seeing nice big moves, but in the end and in the long run, this is not a company that you want to invest in because it's seeing continuous lower highs, and after every pop, it eventually dwindles out and those gains are erased. But we are seeing some nice short-term gains, and again, great for trading opportunity. So we look at the daily chart and we see we hit a high of 0.0053, and now we're consolidating, and we built a base here of 0.0029, and then Friday the low was 0.003. So very clearly the bulls are defending that level, and they bought a little bit of that dip Thursday and a little bit of that dip Friday. You can see on the lower wicks showing the bulls buying that dip. Now, if we see a break of 0.0029, it's a big red flag, and we're headed back down to the teens. But if we continue and see the bulls show up after these lower wicks and break the high of Friday of 0.004, that will be a good sign that we're heading back to the recent high of 0.0053. But ERBB is a bit of a red flag because of that history, and because this chart, I can look at this chart without even looking at the financials, and I know that there's dilution going on and convertible debt going on. You can tell just by the price action with the pops, with the short-term money coming in, and then slow and steady, long, drawn-out pullbacks. So red flag for long-term on ERBB, but in terms of day trading opportunity, certainly some decent action over the past 2 weeks. VRX, not sure if they have any business in the marijuana sector, and I'd certainly be interested if they do, but certainly been covering VRX due to its relation to the biotech sector, but feel free and post because I'm very curious to know if VRX does have any exposure in the marijuana sector. But either way, VRX has been in a big-time downtrend, and that's partially because of the election. The Democrats have all these biotech's names in their crosshairs, and the entire sector is suffering the past month. And you can see very clearly the trend on VRX has been bearish the past 2 months, culminating with a dump on Friday on high volume, hitting lower lows. So the weekly chart for VRX, it's just been off a cliff the past year, going from $200+, now we're down at $20, a 90% deterioration of shareholder value. And it's very clearly in a bearish trend. You can see we've seen essentially 2 months in a row of red weeks. The bulls are nowhere to be found. So the last support that we've seen is down here at 1855, the low of this dump. And with the weekly end of the week close dump, we are looking to head back down and test that level. So I would be very cautious in this name. We have been keeping an eye on it because there are some people who are looking for longer term entries, but there is just no sign of the bulls on this chart. And again, a break of 1855, that low, is absolutely going to indicate further dumping to the downside. So VRX, very cautious here. You can see very little bullish action. We've seen 2 days in a row of green one time in the past 2 months, and it was a very weak 2 days in a row on decreasing bull volume. So bears are in full control of VRX. Caution on that name. VAPE, very nice longer-term uptrend for the past couple months. We have been bouncing off the 10-day moving average support the past couple tests, the past couple weeks. It's currently at 0.0083. We bounced off of it Thursday and Friday, and the last 3 days, bulls buying the dip is showing lots of strength, and that's confidence in the bulls. So we closed back above the upper Bollinger Band, above a penny on Friday, and that penny is a very clear psychological resistance level, and it's a great sign if the bulls turn that into support, because then it will be a strong support level. These nice round psychological numbers, 1 penny, 10 cents, $1, they do attract and act strongly as resistance and support depending on where the price is above or below them, and that's due to human psychology and those nice round numbers. But it is a very bullish buying of the dip. Strong close, we're looking at resistance of 0.0115, and then we look back at previous history. Nice ramp up on volume on the weekly, and this is the key resistance to watch, 0.02. If we get above 2 cents, and they might be rounding here, I'm going to have to zoom in and see if that is a more specific level than 2 cents. It is 0.017. So if we break 0.017, we break the lower high pattern on the weekly time frame. And here's another name where you don't want to be long. Look at this trend. Anybody buying in 2014 or 2015 has lost tons and tons of money. The price was up above $1 back then, and it's now at 1 penny. So people are losing over 95% of their position if they are going long in this name. And this is another one where I don't have to look at the financials. This chart tells me that we are seeing dilution and we are seeing convertible debt driving the price to the downside. So there's the bull volume ramping up, but I would anticipate this bounce to be short-term and comparative to the long run because I'm seeing a lot of shares hitting the market. So 0.017, if we get above that level, could be an easy move up to 0.025, and the weekly chart is still very strong here for vape, but again, this is one to trade, and this is not one to invest long-term in my opinion. All right, trying to catch up here, we've got AMMJ. AMMJ, very healthy looking chart. This is a good sign for the bulls because when we consolidate, we form a low back here at 65 cents. Then we formed a higher low at 70.708 cents. And now we're breaking to higher highs. And look what stands out. Look at the bear volume on that 3-day pullback and look at the bull volume that showed up Friday heading to higher highs. This is exactly the consolidation that the bulls want to see on a very strong uptrend. This is a good looking daily chart. And we're at the high we've seen on this move. So the upper Bollinger Band on the daily chart will be resistance on Monday. You want to update that level. It will likely be around 120. And we need to keep an eye on that level. And if bulls see increase in volume over 3 million shares traded Monday, AMMJ is going to continue to run. Look at the huge bull volume here in September and October. The RSI is very overbought at 93. So we can expect some pullback. When we are in full-on breakout mode, the RSI is less important, but it's definitely worth keeping an eye on, and we can see that the price has gone 1,000% in 2 months. So we are breaking key resistance levels, and I do have to zoom out to find the next previous price resistance, and I can see it back at 148, 164, and 189. The tops back in June 2014. And if the bulls can get above those levels, it will be a very bullish break in the longer-term chart. So let's zoom back in and look at when the clear trend changed here. We were in a very clear downtrend, and this is what I was talking about with that long-term from 2014 highs. We just pulled back for essentially 2 years until now. But it was a very clear higher low, higher high, and then here's the breakout as soon as we broke 33 cents, essentially the top of that move. But we could see as soon as we broke this lower high of 20 cents, now the trend is changing, going from lower highs and lower lows. Now we have our first high, higher low, and now a higher high. So we see the bulls are changing the trend, and then it led to some very strong upside and still looking good on the daily and weekly chart for AMMJ. NDEV, Also looking good on the daily. We've been consolidating a bit longer than these other names, and it's essentially sideways consolidation. So that is still a good sign for the bulls, and what we want to watch is the range of this sideways trading. So I can see the consolidation low is 23 cents, and the high is up at 36 cents of this consolidation period. So we're trading within this range, and if we see a break of 36 cents, we are going to look to head back to the high of 55 cents, and if we see a break of 23 cents, we're going to look to come back and test the middle Bollinger Band support, and we'll essentially see a bearish MACD cross if that does occur. So we have a very defined range, and this is why I advocate trading these penny stocks. This is a very clear bearish reversal spinning top candlestick on a volume climax. Oftentimes a volume climax, when it stands out like that, will indicate the top of an uptrend or the bottom of a downtrend, depending on where it's found in the trend. So here was an example where the volume climax signaled the top, and if you're selling up in the 50-55 cent range, you're making a lot of profit, and we then just pulled back 50% in 2 days, and you could rebuy your shares and double the amount of shares you own if you wanted to reinvest all of it, or you could take your money off the table and be riding free on house money. Worst case scenario, you lose it all and you lose nothing because it's all profit. But that's just my point. We're utilizing technical analysis, and seeing these candlestick shapes can give you an indication on when to get out, and it gives you an opportunity to reload cheaper. And 50% in 2 days is no joke. So watching this range very tightly, we're going to see a clear break likely in this coming week. We're still holding the upper Bollinger Band on the weekly in breakout mode. Keep updating these weekly charts at the start of every week to know what that level is on the upper Bollinger Band. And we need to see that level hold to remain in breakout mode. So we do have an upper wick of profit taking. Let's zoom out a little bit to get some previous price resistance. And we did make a very bullish break above 50 cents psychological. That was the top back in 2014. You cannot find many names that have broken their top of 2014. So that does stand out. Look at the low of 2014, high of the bounce, built a base of a higher low, and now we did hit a higher high, but we did see profit taking. Bullish close on the weekly above 50 cents will go a long way for bullish confidence in NDEV. So interesting. Have not come across a chart personally that has broken, besides the Canadian names, that has broken 2014 highs. So NDEV does stand out for that reason. But again, the upper wick of profit taking, we need to see a strong close on the weekly over 50 cents to see that confidence follow through. CARA. CARA is in a lot more of a pullback, a lot more consolidation than any name I've seen recently. So the red flag, there were a couple red flags. The first one was when we pulled back and we broke this higher low. So here's our consolidation, normal healthy consolidation, forming a higher low at 783 and continuing to higher highs. On the pullback, when we broke 783, we then broke the higher low pattern. And you can see some increase in bear volume, and then sideways trading. We built a base of support at 751, 753, 753, and as soon as that level broke, that's another clear red flag because it's another lower high and then another lower low to the downside. So there's been a lot of profit taking going on in CARA, more than I've seen in pretty much any other ticker that I've looked at, and that is a red flag. And we can see here on the weekly chart, we did form a higher low and a higher high compared to the 2016 trading. But again, knowing the shape of the candlestick, let's zoom in, knowing the shape of the candlestick gives you an indication on when to get out. This was a bearish reversal inverted hammer at the top, and it was confirmed the next week with a red candlestick, and we've been pulling back ever since then. So we need to find a support level. It's looking like we're going to test the middle Bollinger Band on the weekly this coming week even. That level is going to be around 640. Have to update that on Monday. And the bulls really need to hold that level and keep the weekly higher low pattern intact, which it still is intact at this point. We've just seen a lot more consolidation on the daily chart than in other names. And here's another example where if you're selling in the $8 to $9 range, you are now able to buy back 20% plus cheaper, and trading this sector is the way to go rather than just letting your money sit, leaving gains on the table, and watching those profits erode away. GILD, we've been watching this biotech as well. Not sure if they have exposure to the marijuana market. I'd be curious to know the details of those fundamentals. But here's another example. If you look at the biotech charts in the NASDAQ and the S&P 500, they are getting clobbered the past month, and I believe that is due to the election and due to the Democrats. So we had a very clear little oversold bounce. The RSI was oversold. We were dumping. We built a base, short-term bounce. This is a bearish reversal spinning top candlestick, and we confirmed it in a big way on Friday with a gap down on high bearish volume. So it's just another lower high in this pattern. Look at this weekly chart. We topped out in June 2015, and we've been seeing lower highs and lower lows ever since then. Big time dumps to the downside and weakness. We have not confirmed a bullish reversal candlestick. We had a bullish reversal candlestick 2 weeks ago, and this past week we did not confirm it as we're seeing further weakness. So these biotech sectors are hurting bad due to the election, due to the overall sector, and Guild, the bulls are nowhere to be found in the short term. So ACBFF was that ACB ticker. Here we go trading sideways where we have to hold the low of consolidation, 148, and the bulls want to break the high of consolidation of 179. The middle Bollinger Band support is here, and that needs to be held as well, and it is ascending. So the bulls' hope is that this middle Bollinger Band will help drive the price to the upside, a break of 179, and we're looking up at 189, the high of this move. So the weekly chart for ACBFF, sideways consolidation is a good-looking sign for the bulls. It's normal and healthy after such a strong breakout, and this stock has seen huge gains over the past 3 months. So consolidation is normal and healthy, and if we break 148, we know further consolidation is coming, and the bulls need to see a break of 179 to show back up, and a red flag Monday or Tuesday would be losing this middle Bollinger Band daily support and closing below that level. FOXA, nice trend for the past 2 months, and we're seeing consolidation. Look at the bearish volume on consolidation. Decreasing bear volume, spike in bull volume heading to higher highs, low bear volume consolidation, and we did form an inside candlestick again where the range of Friday fit within the range of Thursday, and seeing that tightening range forming, and the upper Bollinger Band is acting as resistance at 2634. So we need to update that upper Bollinger Band on Monday and see what level it's at and see if it's going to keep rejecting the price. We've got resistance at 2653, the high of the move, and 2680 is the 200-day moving average. And we can see we formed a higher low compared to the low of February 2016, but it's going to take a big move to turn this trend around. We have a double top at $31 essentially, this psychological level. We topped out twice there, and it's going to require getting above $31 to change. Let's try that again. To change this longer-term trend to favor the bulls. 31, very key resistance, but again, lots of resistance levels to deal with before getting up to that level. So 200-day moving average will be key to watch this week. And as long as we keep establishing these higher lows on consolidation, the bulls are in control. OGI.V. Thanks for adding that .V Canadian tickers, making my life easier. So here's another example where he bounced off the middle Bollinger Band support, formed a nice big bullish reversal candlestick, formed a lower high compared to the high of the move, so we see a tightening range. Our support is 236. Our resistance is the high of the bounce attempt at 283, and now we're trading on very low volume sideways. Middle Bollinger Band is continuing to catch up. Break of 283 is bullish, and we'll head back to the high of 311, and a break of the middle Bollinger Band support is bearish, as is a break of 236 if that were to occur. So a good sign for the bulls on Friday, the fact that that red day was on such low volume, and the weekly chart is in full-on breakout mode. Look at this Canadian ticker, 20 cents, a 1,000% plus gain over the past year, and look at how clear this bull trend is of higher lows and higher highs, and here we are in blue sky breakout mode. The price has never been this high on this name, and it acts as very little resistance because there's no previous price resistance. So we upper Bollinger Band on the weekly is 269. We closed right at that level, still maintaining that support. And as long as we stay above the upper Bollinger Band on the weekly, we are in full-on breakout mode. But there's some more specific levels here to clearly watch on the daily. Middle Bollinger Band daily support is very important going forward. BLOZF. So BLOZF has some big upper wicks of profit taking last week. And not sure the volume here. These look almost like misprints just because I can see the volume wasn't really high enough to see the price move that way. So I'd be interested to talk to someone who saw this trading, and I would bet that those were just little prints and that the price didn't really get all the way up to those levels. But we do have the 10-day moving average being lost as support. That's a red flag in the short term, just because we have bounced off 10-day moving average support multiple times on the way up, and we did just lose that level, and we are on the verge of a bearish MAC decross. So a red flag would be losing the middle Bollinger Band support from here. That's going to be in the low 40-cent range moving forward. And resistance, I'm looking at 50-cent psychological resistance, the top of this little bounce attempt, and then back up towards 616, where we topped out here at the high of this move. Big upper wicks on the weekly. Again, not sure if those were misprints. I'd have to look at more details. But breaking above this level is very strong, 64 cents. But we need to close above that level because we're right here on blue sky breakout mode as well, with very little price history resistance at that point. But this is a very clear bearish reversal candlestick with the long upper wick of profit taking. And again, I'd have to look at the details to see if these upper wicks are legitimate or if those were just little misprinted trades during those days. But I would be very cautious looking at that weekly chart. If we break 366, we're heading back down to the upper 20s in my opinion. MDCL, so consolidation, bulls buying the dip in a big way on Friday. The upper Bollinger Band resistance is 370. Update that on Monday. It's going to be up in the 380s. The high we've seen on this move is 403, and you can see there was a lack of volume before it just showed up out of nowhere mid-October. And the weekly time frame, here's another one that's fairly close to blue sky breakout. We'd have to get above $5 psychological resistance, but you can see the last 2 weeks is volume unlike this stock has ever seen before, and we are in full-on breakout mode on the weekly time frame. So if the bulls keep continuing to push higher, and if we get above $5, this is the kind of stock you want to be in. If we break $5, we're in blue sky breakout mode, and seeing this kind of big volume, we could see a nice continuation move to the upside. Weekly upper Bollinger Band support is important, and we'll see if we can maintain the low of this consolidation, 306. Any low that we see from here needs to be higher than 306 to maintain the higher low uptrend going forward. MDCL is one to keep on watch. It's looking pretty good. SIPC, holding the 10-day moving average support, lots of lower wicks showing bulls buying the dip, but lots of upper wicks showing profit taking. So we are still maintaining steady. And here's another one on Thursday. You can see this big, huge lower wick. I look at the volume, and that tells me that that's a misprint. There is not enough volume to see that kind of range on this ticker. So I don't believe the low of Thursday was actually down at 0.004. But we're holding the 10-day moving average support the last 4 days, and the bulls need to confirm this bullish reversal candlestick from Thursday with a move back towards breaking 0.0095. And here's a perfect example where 1 cent psychological resistance is knocking the price down. We've topped out at 0.0099, 0.0098. We broke it, but we couldn't close above a penny. We closed right on it, and then we closed below it the next 3 days. So the bulls must close above 1 cent, that round psychological resistance number, to be looking back at 0.0127, the high of this move. We have a very clear lower high pattern, but we also have higher lows. So here's our bounce, higher low, lower high, higher low, and currently a lower high. So this is the kind of play where you can draw some nice easy trend lines hitting those lower high resistances, and you can see that pullback from this week was just below that resistance level. And you can also draw an uptrend support line to be keeping an eye on, and you can see the range is tightening, and we need to see a bullish break above these recent highs. And that recent high is up at 0.017. 0.019 clear resistance levels, but first things first, bulls must close above 1 penny on the daily time frame. BTE. BTE, after pulling back, this is not a good looking stock in my opinion. Very clear lower highs and lower lows. Doesn't look anything like those big breakout uptrends we're seeing. So the bulls are in trouble here. And we've got support at 388 and then down to 359. Resistance is the 50-day moving average. It has rejected the last 2 bounce attempts. It's currently at 435 and dropping, and we have all of these moving average resistances in the low $4 range. The weekly time frame shows a nice bounce from early 2016, but it's now topping out a little bit. And we can see after higher lows and higher highs for the first half of 2016, now we're setting lower highs and lower lows, and we've rejected from the 10-week moving average resistance for the past month, and it looks like we're coming down to test 359, and if that level breaks, we're looking down at 325 as the next support. So this is a chart that is turning around to favor the bears after a nice strong start to the first half of 2016, but this doesn't look anything like those bullish breakout names that we're looking at here. EMH.V. Longer term consolidation, but the bulls are holding on. So the low of that support, I'm looking at a low of 65 cents, a higher low of 70 cents, and now a higher low of 78 cents. So it's still maintaining higher lows, but we're also seeing lower highs, which is that range tightening. 113 is resistance, 94 cents is resistance, and you can see how tight the price has gotten. And when you see volume taper off and decrease and a very tight range, you know a break is imminent. So a break of 85 cents would be a very bullish break to start next week, and we'd be looking up at 94. And a break of 78 cents means we're likely headed back to 70 and 65 cents. So here's one that's going to have a very clear break, in my opinion, early next week from this tightening range. And you can see on the weekly time frame, really nice uptrend and consolidating, forming higher lows, tightening this up, sideways trading. Bear volume on these bear weeks has been very low, so that's a good sign for the bulls overall, with the bull volume clearly outweighing that bear volume. And zooming back to look at previous resistance, if we do continue to higher highs on EMH.V, and it's blue sky breakout mode. So we have not been able to close above the highest close of 93 cents. We have broken it, but it's that $1 level acting as psychological resistance. Highest close we've seen is $1 on the dot, and it's exactly like that 1 penny stock we just looked at, where we've hit that resistance multiple times, but we've been unable to close above that nice round psychological $1 resistance level. That's the goal for the bulls this coming week. VNTH, volume coming out of nowhere, nice bull move, but we're giving back a lot of that gains to the upside. So we're now down 66% from the high of this move in 4 days. And that's where having an exit plan comes into play. And we can see we're building a base of support at 0.0015. Bulls must hold that level or we're headed down to 0.001. Resistance is going to be up at 0.0025. And this is the kind of chart that has a little bit of liquidity concerns, not seeing a ton of dollar volume, which is why we're seeing the price move 66% in just a few days because of that lack of volume. So here on October 14th, I'm seeing we had 15 million shares traded with an average price of 1 penny. So that's what, $15,000. So I don't trade names that have less than $100,000 liquidity at the bare minimum. It does make trading more difficult, and there's a wide spread between the bid and the ask. So a little bit of a red flag there, and looking like this short-term bounce might have played out. There's still weakness. Again, if we break 0.0025, we'll be looking up at 0.033, but the bull volume needs to show up, and the bulls need to see some nice 50 million share trades. And keep in mind that we were trading at 0.001 and 0.002, so this name has seen 4,000% gains to the upside in the past couple of weeks. And that's why people are locking in their profit here, because they're up so significantly. VNTH just did it. MSIG. MSIG's been around for a while. And here's another one where if you're buying, this is the weekly chart, if you're buying in 2014, how did the longs do? Anybody that bought on the run-up in 2014 over the next 2 years? They lost a ton of money if they were investing and not trading. So if someone had an exit plan, they locked in their gains, and look at the prices they could have bought here down in 2016, making those gains yet again. So MSIG on the daily is seeing a nice uptrend, holding the 10-day moving average support the past 3 times we've tested it. Volume is dropping off. So must-hold support is 0.095, resistance is 11.8, and then up to the high we've seen of 13.85. Need the bull volume to show up on Monday, confirming this bullish reversal candlestick and confirming that we are going to head back towards recent highs. The weekly resistance, this 200-week moving average, is rejecting the price. That's at 14.2 cents. We topped out just below that level, and this is the kind of ticker where we have tons of previous resistance to look at. We've got every time you see a lower high on the downtrend, that's where we see resistance. So I can see we topped out on this bounce attempt in January 2015 at 21.6, so I know that's a resistance level that's coming up. Another lower high here at 3.12. The point being, this is a perfect example of not wanting to invest in these names, wanting to trade them. Huge gains in 2013 and 2014, all being erased over the next 2 years, and now we're seeing nice movement back to the upside. But I would say it is very unlikely that MSIG is going to head back to 2014 highs. We would have to see another 600, make that another 800% to the upside, and I don't think the volume is going to be significant enough to make that kind of dent. Papa, not sure if this is the ticker. Papa Bello Enterprises, if it is, this is not a name you want to be playing. Very illiquid days of no volume whatsoever and a very clear downtrend. So not sure if that's the right ticker. Let me know if it's the wrong one, but would not want to be anywhere near that ticker just looking at the volume alone. APH. Nice uptrend here, higher lows and higher highs, and even though we did consolidate and started to form some lower highs and lower lows, we bounced off the 50-day moving average support and very quickly on a ramp up of bull volume headed to higher highs. So now we're consolidating again on decreasing volume, holding the 10-day moving average support just above $65, and the bulls need to break 66.09 and then 66.78 to continue this uptrend to the upside. Weekly time frame has been a huge bull for years. This is a great looking longer term chart. This is one that's fine to invest in because you can see over multiple years the higher low, higher high pattern. So we are now in a very bullish uptrend holding the 10-week moving average support, but being rejected by the upper Bollinger Band resistance. So let's zoom into this name and see that very clear channel. And we've been in that channel for 5 months. So if we lose the 10-week support, that's a red flag. And we know that the upper Bollinger Band acts as resistance, so that's going to be in the mid-$67 level going forward. But APH is one that looks good for longs. Not sure what their exposure is to the marijuana sector, but very nice uptrend on the weekly for the past couple years, and nice recovery off the 50-day moving average support heading to higher highs. And this is the kind of volume the bulls want to see. Look at the bear volume on this dump back in early October, and then compare it to the bull volume that headed to higher highs. Clearly the bull volume is outweighing the bear volume. INSY. So INSY, very clearly in a downtrend. This is not the kind of name you want to be in. We're rejecting from the middle Bollinger Band resistance many times. We're rejecting from the 10-day moving average resistance. And on Friday, we hit multiple month lows. So support is 1037. Resistance is 1119, the 10-day moving average, 1170, the middle Bollinger Band, and the weekly chart is extremely bearish. So this is one where the trend is not your friend. We've been in a clear downtrend for over a year now, dumping lower highs and lower lows. The bears are in full control of INSY, and I would advise being a bull in this stock. So support, if we break 1037, I have to zoom out multiple years to find the next support as we are at multiple year lows, and I'm looking down at 1026, and if that level breaks, huge red flag again for the bull. So there's tons of red flags on this trend and on this overall stock. Would not want to be bullish long in INSY. BE.CN. And that's not a ticker on either of my charting. Let's see what else you got. BE.CN, LIB.CN, and looking like those Canadian, I assume they're Canadian names, but I can't find those tickers on these charts, so sorry about that. OGRMF, I've liked this one a lot. Bullish reversal candlestick right off the middle Bollinger Band and a weak bounce. So we now have our low of consolidation support at 175. That's a must-hold level. And our resistance on the bounce attempt of 213. So that's our range we're watching. A break of 213 and we're headed back to the highs of 237. And if we lose the middle Bollinger Band support, it's a red flag. And if we break 175, it's an even bigger red flag. So the weekly time frame has been in a huge uptrend. This is one of those Canadian names that has seen 2,000% plus gains in a year. Very clear uptrend, higher lows and higher highs. And the bulls bought the dip, and we lost the upper Bollinger Band weekly support at 203. We closed just below it, but the candlestick does show the bulls buying the dip. So we'll need to see if we can get back over the upper Bollinger Band on the weekly this coming week. And if we can't, history shows that after breaking out above the upper Bollinger Band, once we lose it, we do consolidate for a few weeks. So keep that in mind. If we can't get back above the upper Bollinger Band this coming week on the weekly time frame, we will likely see a couple weeks of consolidation on OGRMF, but this is one to keep an eye on in the Canadian sector. ZYNE, lower highs on the daily, very clear support here, down at 1056, 1057, 1066. So bulls trying to hold on to these levels. It's a bullish reversal doji on Friday. We need confirmation on Monday and a close back above these moving average resistances at 1130 and 1150. So the lower high pattern is clear, the base of support is clear, and if we break 1056, further consolidation is coming. The weekly time frame, fairly recent IPO. So we built a base of support. Now we're seeing higher lows and higher highs trying to turn the trend around. And low volume consolidation. And here's one on the weekly chart where we're seeing inside candlesticks form. The range of 2 weeks ago was within the range of 3 weeks. The range of last week was within the range of that one. And if we break 1066, clear bearish break. And if we break 1255, it's a clear bullish break. So normal healthy consolidation at this point, and we're going to see a clear break likely this coming week. And we're on the verge of this support. If we break down below 1056, another leg to the downside is coming. CNBX. CNBX is in full-on breakout mode. Awesome volume to the upside. We saw very clear. So here's a perfect example of tightening candlesticks inside candlesticks. Each range, day after day after day after day, tighter and tighter, and then a clear bull break to the upside on increasing bull volume leading to higher highs. Upper Bollinger Band support is very key and holding. We've got resistance at 41 cents. And look at the range on the candlestick for the day. 26 cents to 41 cents. Huge gains back in either direction. And that's where you want to be using stop losses and trading this kind of name, because you can very quickly be up 30% and then lose that 30% in one day. So the weekly time frame is in full-on bull breakout mode. Let's look back and see where we have to reach to see blue sky breakout mode and have no resistance levels left. And I'm looking at previous price resistance, 49 cents, the high of September 2014, and $1.40, the high of July 2014. So increasing bull volume on the weekly is a good sign. The bulls are still in full control, and we'll see if we can make a dent back on those resistances from 2014. Good-looking daily chart, and this move has just started in October, but again, you want to be managing stop losses because of the large volatility and ranges on CNBX. MGW.V, another Canadian name. So here's this consolidation again, big bull breakout. Now we're holding the middle Bollinger Band support. We've tested it and held it 3 times. That level is 74 cents, and you need to update it on Monday because it closed below that level, and we're headed back down towards the low of consolidation of 62 cents. A bullish break would be a break of 83 cents to be headed back towards the recent high of 99 cents. And here's another example, $1 psychological resistance level standing in the way of the bulls. So you can see it's getting very tight here on the daily. Clear break is going to come early this coming week, and it does look like a bull flag on the weekly. Very strong uptrend over the past couple years, and let's zoom in. A bull flag is when you're consolidating after a breakout, and it's normal and healthy short-term consolidation, and it's a continuation pattern where you continue for the bulls. So we'll see if that's what this pattern is going to be. You do have an increase in volume, but some of that can be attributed to bulls buying the dip because you do have that lower wick on the weekly time frame. But we are struggling at the upper Bollinger Band weekly resistance, so update that level next week. Be aware of what that resistance level is that needs to break, and watching to see if we can get a clear break of 83 cents and higher highs for the bulls. EAPH. Another one that's stair-stepping higher, forming nice higher lows and higher highs. A bit of a red flag. This increase in bear volume Wednesday to Thursday does stand out as a bit of concern. We're holding the 10-day moving average support of 0.0108. Update that level on Monday. It needs to continue to hold. And the bulls need to see another green day confirming the bullish reversal hammer that formed on Friday. We've got resistance of 0.0137, 0.0153, and then the high of this move, 0.0192. Weekly time frame is in breakout mode, turning all moving averages into support, and we need to zoom out and look at previous price resistance. And I'm looking up at 0.022, and then the high of 2015, 0.0353. So we'll see if the bulls can maintain this strong breakout, and as long as we hold the 10-day moving average support, the bulls are in full control of the short-term trend, but the bulls want to see a confirmation candlestick, another higher low, higher high green day on Monday to confirm that nice hammer with bulls buying the dip on Friday. ACOL. So maintaining higher lows and higher highs as well. The bear volume, although it looks really scary on this big pullback, the bear volume has been decreasing, so it's not a huge red flag. I'm looking at higher lows being built. Support is 0.0015, higher low of 0.0016. So that's a very clear support level. If we break 0.0015, it's a huge red flag for the short-term bulls. And here's another one where we have a bullish reversal hammer on Friday, and we need an increase in bull volume, another green day to confirm this and have us looking back at recent highs of 0.0031. And we can see some nice big volume. There's another one where the volume climax indicated the top of the uptrend, at least temporarily, before a big-time pullback. And seeing profit taking, if you took profit up in the 2.5 to 3 range, you can now reload for 50% cheaper, essentially. So the bulls showed up on Friday, need follow through on Monday to be looking back up at those highs, and a break of 0.0015 is a big red flag for ACOL. SLTO not getting that ticker. Sorry, can't do SL. THC.TO. Some of these Canadian names are difficult to find, and I can't find a chart on THC.TO as well. So I'm not sure if they're dual listed and if they do have an American exchange that I can look at them on. But if they're not showing up on either of these charts, not much I can do at the moment. We'll see if there's alternative tickers later that I can look at. MT.V is showing up. MT.V support 345 was a low of consolidation. We formed a higher low at 353 and regained the middle Bollinger Band. So the bulls need to head back up. Resistance is 412, 424, and then the high of the move 424. So that's a clear double top. Very clear resistance level. If we can't break that level, we're not going to see higher highs. So bulls need continuation on Monday, and a break of 412 on Monday would be a great sign. It is a bearish reversal candlestick on the weekly time frame, and it is a doji. Let's zoom in a little bit and get a better look here. So this is a bearish reversal doji, and at the top of an uptrend, it does indicate potential pullback, and we can see this very clear resistance level, 424, double top, and then 419. So the bulls need to show up early this coming week. If we lose this middle Bollinger Band support again, we can look to pull back to the mid $3 range. So Monday is going to be an important day. You can see very little volume on Friday, not giving us much information. But if we cannot see this middle Bollinger Band hold on the daily due to the clear resistance on the weekly, we will likely head back to the mid $3 range on MTV. So hemp was a laggard in terms of this breakout, and it didn't see the move start until the end of October, where most names were starting in early October. So we did see a nice move up to 5.6, but we pulled back significantly, back down to 3.45. So the bulls did show up on Friday, but again, we need confirmation, and this chart here is being screwed up due to this candlestick way back here, so I'll try and zoom in and get a little bit more clear of a look. So here we go. That's nice, healthy consolidation in the sense that we held a higher low, a little bit of a red flag with that high volume on Thursday for the bears, and we need to see a break of 0.0425 on Monday to show that this bullish reversal candlestick can be confirmed and we can look back up towards 0.056. So it's an important day on Monday for a lot of these names to confirm the bullish reversal candlestick from the end of this week. The weekly chart is a very clear bearish reversal candlestick on high volume. Hemp is one of these names that is not seeing significant upside, and I think that's due to a lot of overhead of shares. Look at the price, and this is due to a reverse split that the price was up at 340. So there's a red flag in hemp. It did a reverse split so it could issue more shares, and we've seen a drop from $3.40 to 4 cents. Anybody in this name in 2014 or 2015 has lost tons of money. And there are, when you look at a chart like this, you can see that we have tons of bag holders that are just going to be looking to exit as soon as they can make some of their money back. So this is a longer term chart. Hemp is a red flag. And we even broke the lows of 2013. And again, it's that reverse split and shares hitting the market and dilution that is leading to this multiple year downside. And sure, we're seeing a nice short term bounce here, but comparatively, we're not going to do anything to make a dent in this trend for hemp. We can go up to $2 and see a 4,000% move to the upside, and we're still going to be forming lower highs. So I think hemp is one of these names that you want to stay away from as a long. It's a great day trader, but again, I don't even have to look at the financials. I know there was a reverse split. I know there's dilution and convertible debt driving this price to the downside. CNAB, very nice uptrend. Consolidation on decreasing bear volume, bulls trying to show up on Friday, and here's another one. We need confirmation on Monday and follow through. We need a break of 166 and 174, ideally on more than 1 million shares traded, to give those confidence back to the bulls that we're heading to higher highs. Little bit of concern that this is a bearish reversal spinning top at the top of an uptrend. Need to see this upper Bollinger Band on the weekly chart hold, and the last thing the bulls want to see is a red week confirming that spinning top candlestick. So let's zoom out and see if we're close to 2014 levels. Another one with some red flag. Again, if you're in this name in early 2014, you just sat through 2 years of downside and a big time loss. The price was up at $11 and it ended up coming back down to 12 cents. Huge losses in this name for anybody going long term. This is one that you want to be trading. So resistance, I'm looking up at 425. The high of this week is resistance 236, 425, and then the high up at 1145. Look at the volume. This is a perfect example. I wish I had this one for the webinar, but here we are now. Look at the volume that it required in 2014 to take the price from 10 cents to $11. So that's what, a 10,000% gain? Either way, look at the volume it took. It took 590,000, a couple million shares traded to do that move. And now look at the volume coming in here. Millions and millions of shares, and we're nowhere near where we were back then. This is a classic primetime example. The share structure of this company has ballooned since 2014. And again, I know without even looking at the financials that they have increased their authorized shares, or at least their outstanding shares, significantly. So this kind of volume, if we saw this volume in 2014, this stock would be up at $100. But because of all the new shares hitting the market, this kind of volume is hardly making a dent into the move that we saw back then. So the share structure has ballooned. There are many, many, many more shares hitting the market here. and it's in a nice, very nice uptrend. Great for trading the past couple months, but not something you want to be long in my opinion. NMUS. Big red flag in terms of the pullback. We saw a move to 180, and here we are back down at 68 cents, so giving back essentially 60% on high volume. Look at the bull volume it took to get to that price. Look at the bear volume that showed up. So we have 3 days of bull volume that equals a total of 700,000 shares traded, and then we have 1.6 million shares dumping. This is insiders dumping or someone who loaded up previously or debt holders. This is a huge red flag, the volume and the dump. So I would expect at most we would see a short-term little bounce recovery, but I don't think we're headed back to $1 anytime soon on this stock due to that volume. This tells me there are people waiting to unload shares at the first sign of a breakout. Weekly time frame, that tells the story. Huge dump. We were up from the IPO up at $11, $10, and then we dropped all the way down to 40 cents. Huge pullback. Bearish weekly candlestick showing tons of profit taking, and there's some red flags in this ticker as well, most notably the huge bear volume compared to the insignificant bull volume. TWMJF. Nice bounce off the middle Bollinger Band. Lower high was set, so there's our range right there on this consolidation. Support 415, resistance 502. Break of 502, we head back towards 556. Break of 415, big red flag for the bulls. We head down to $4 even. Weekly time frame is blue sky breakout mode. This is an awesome looking chart for anybody long. Blue sky breakout is ideal scenario for the bulls. Same instance though, we did lose that upper Bollinger Band weekly support by a few pennies, and we will look to consolidate because historically, when we fall back in the upper Bollinger Band after breaking out, it does lead to consolidation and some sideways trading. So keeping an eye on this range on the daily, the bulls want to hold this middle Bollinger Band, which will be in the mid $4 range in the early week coming up, and need to see a break of 502 to continue to the upside. APH.V maintaining higher lows, 326, 332, 337, and we need to see a break of 380 resistance and then 393, $4. So a tightening range is forming on the daily time frame. Let's see if the weekly chart is going to give us an indication. Awesome trend since its history. Very bullish uptrend long term. Another Canadian name at Blue Sky Breakout. But we are consolidating. The 10-week moving average has held as support for 4 months. That level needs to continue holding for the bulls. It's going to be up around 340 this coming week. The low of last week was 393, so we're still well above that level. But we are looking a little bit toppy if we zoom in here. This $4 psychological resistance level causing the price to pull back multiple times. So we need to close on the weekly over $4 for the bulls to continue, and we need to maintain the higher lows, 326, 332, 337, and the bulls did buy some of that dip last week, so we will look for an attempt back up at 380, and a break of 380 would be a good sign early this coming week. MYDX. I'm going to do 10 more minutes here and see how many more I can get through. MYDX bouncing off the middle Bollinger Band support. So if you've been watching these, it's very clear that that is a pattern that shows the bulls buying off of that key middle Bollinger Band daily support. We headed to the upside on increasing bull volume, and we topped out at 55 cents. So there's our range on consolidation. 3 cents is support, 0.055 cents is resistance. Not a ton of bear volume Friday is a good sign for the bulls. As long as we hold this middle Bollinger Band, we will form higher lows heading back towards the upside. And the weekly time frame shows that big bearish reversal candlestick leading to consolidation, but the bulls back tested and held the 10-week moving average. This is another one you do not want to be long in. Look at the overall weekly chart. We were up at $1 a year ago, and here we are down at 2 cents. Anybody in this name long is losing big money. It's a name to trade, not a name to go long in. PHOT, not sure what happened on Friday. Looks like a little bit of a misprint. I doubt we opened down at that level. It was probably just a quick trade at that point. But look at the key 200-day moving average support, which is currently 0.016. We held it 1, 2, 3, 4, 5 times, and then we lost it on Thursday, but we did regain it Friday and closed at the high of the day. So the bulls need follow through on Monday, ideally more than 23 million shares traded, and we need to see a move back towards 0.021. This is the one, if you saw the webinar, it was halted, it was up at 77 cents, and anybody long in PHOT lost huge money over the past 2 years. So we have a key resistance up here in the 8.5 cent range. But again, this is one to trade and not to go long in. Here we are rejecting from the 100-week moving average resistance twice in the past month. That level is 0.0191. So big volume coming in. And here's another example where we have, look at the volume it took in February, 51 million shares to move the price from 0.012 to 0.085. Essentially a 600% gain on 51 million shares. Now we're seeing 200 million shares 2 weeks in a row, and the price is not moving. That's telling me that shares are being dumped into this move. We have bag holders getting out. We have executives taking profit. Whatever the reason is, there are many shares coming into this name, and we're not seeing that upside movement that just back 8 months ago, if we saw this kind of volume 8 months ago, the stock would have been up at 50 cents easy. So dilution is apparent on PHOT. CYX.V, need to be aware of potential illiquidity. We have days here where the volume was very insignificant and the volume is tapering off again as we form a very tight range. We're going to see a very clear break this week on CYX.V. Support, 0.105 was a little double bottom, then a higher low of 0.11, and clear resistance is 0.125 and 0.135. And you can see the range getting tighter and tighter as volume decreases. That means a break is imminent. And a break of 10.5 cents to the downside, clear bear break, and a break of 12.5, 13.5 cents to the upside means we're headed back to 15.5 cents. Weekly time frame is in a nice breakout, heading to higher highs, and need to zoom out to see the history here. And there's not a lot of previous price history because of this movement. There's been very little volume in the history, and now volume showing up leading to this breakout. So it's all about this tight daily time frame. And again, 10.5 cents must hold, and we need to see the bulls break 12.5 and 13.5 cents. And the break of this consolidation will be marked by a spike in volume. We have very clearly seen decreasing volume 7 days in a row, and we're going to see a spike in volume either Monday or Tuesday, and likely a clear break, in my opinion. MSRT, they tried to do an IPO on the NASDAQ, and they were denied. So we'll see if IIRP is going to be the first NYSE IPO. So MSRT consolidated on decreasing bear volume, good sign there, holding the 10-day moving average support on the last two back tests. That's going to be in the upper 70-cent range this coming week, but we're struggling at this 200-day moving average resistance of 0.848. We need to see increasing bull volume on Monday, over 1.4 million shares traded, and we need to see a break and close above that 200-day moving average resistance, which would indicate we're headed back up towards 94 cents, the high of this move. Very clear downtrend since the IPO. Lower high, lower low, lower high, lower low. We're rejecting from the weekly upper Bollinger Band and the 50-week moving average. It's a bearish reversal spinning top candlestick on the weekly time frame, and unless the bulls can get above 167, we're not changing this trend, which does favor the bears. So it's a nice bounce for trading, but the trend favors the bears on the long term with this lower high and lower low. And if we see a red week this coming week, we will look to pull back towards the mid-60s, back testing the middle Bollinger Band weekly support, which would also back test the middle Bollinger Band and 100-day moving average on the daily. Anytime a support lines up on the daily and weekly time frame, you can assume it's some extra strong support because it does have multiple moving averages on multiple time frames lining up at that level. CUZ.V, another one where there's not a ton of volume. We're seeing some days where we have under $15,000 traded, so that's a little bit of a liquidity red flag. We also have a higher or a lower high and a lower low pattern recently the past few weeks. 71 cents, lower high at 69 cents. We consolidated and built a base at 65, but then we hit a lower low on increasing bear volume down to 63, and now we're seeing another lower high at 67. So 63 cents is key. If we break that level, we're headed down to 61, and the bulls want to break 67, 68, and 69, very clear resistances, to head back up towards the high of this move. The weekly time frame has exploded, and we've seen 600% plus gains in the past 4 or 5 months. It does look like we're rounding out a little bit. We might see some pullback, but as long as the 10-week moving average support holds, the bulls are in control. That's going to be at about 64 cents, 63 cents this coming week. Update that level. It's a must hold for the bulls to maintain this weekly uptrend that is very strong. And it does look like a bull flag of consolidation here on the weekly time frame, where we have a strong bull move and then normal healthy consolidation without too much of a dump. And we saw that back in the past. Normal healthy consolidation, breakout to higher highs, some consolidation, higher highs. So we'll see if that's going to be the case. Big red flag if we lose the 10-week moving average support, but it is currently still holding for the bulls. All right, I'm going to cut it off with CBIS here at the end. That's the last ticker I'm going to do. OWCP, I'll get to everybody else that has posted before CBIS. OWCP, bouncing off the 10-day moving average support, bullish reversal candlestick Friday. It needs to be confirmed on increasing bull volume over 5.8 million shares traded on Monday. Resistance is 17 cents, and then the high of 21.5. Nice uptrend the past 6 weeks. Weekly time frame turned all moving averages into support, and then this recent week we back tested and held those levels, but we have a clear double top, 214, 215, the high of the past 2 weeks. So we'll see if the bulls can maintain these levels again this coming week and trying to turn this long-term trend around. Let's zoom out and look at our resistance. A break above 30 cents is a very bullish break on OWCP. Keep it on watch. If we break 30 cents, that shows a lot of strength for the bulls compared to the huge pullback. Here's another one, though, where we had the price at 30 cents, and then a year later, the price is under a penny. Anybody long in this name lost everything on that dump. Of course, we're regaining some of that level, some of those losses, and we'll see if the bulls can get over 30 cents going forward. THCBF. Some decent bear volume on this pullback is concerning, and you might say it is decreasing bear volume, which is true, but it is still a lot more significant than the bull volume that has preceded it, or has followed it, I should say. So support is 69 cents, higher low at 6936. So a clear break. If we break 69 cents, we're heading down to lower lows, and the bears will affirm control. And clear resistance is this bounce high of 8567. A break of that level would show strength to the upside with a higher low and a higher high heading back towards that resistance up at 108. Here's another one, $1 psychological resistance, unable to close above that level, and the bulls have to close above that level to head higher. Zooming out to the weekly time frame, very strong move, but the consolidation is coming. Look at the big bear volume, and a break of 69 cents means further downside is coming. Not a ton of history here, so we are in blue sky breakout land. Definitely worth scouting a bullish entry, but you want to see that volume favor the bulls, not the bears. And that key level to hold is 69 cents this coming week. And if we break 8567, that means the bulls are back in control of the short-term trend. KGC. This is a very clear bearish downtrend of lower highs and lower lows. We have seen some short-term upside, but it's very weak, and you look at the overall trend, and the breakout happened in early 2016, so this is very interesting. Oh, this is a gold name, so gold has been rallying in 2016, that's why we're seeing that, and now gold has pulled back. Not sure if there's any correlation to marijuana sector here, but we are in a downtrend. It looks like a bear flag on the weekly time frame, and if we pull back and break 342, we're headed down to 306. So I don't think there's any marijuana in this name, but very clear downtrend on the daily time frame. 398 is resistance. and 366 is support. No MJN.TSX on either site. CBDS. Good ticker name. Bouncing off the middle Bollinger Band support, bullish reversal hammer Thursday, confirmed on Friday on increasing bull volume. That's a good sign for the bulls. Resistance is 630. Then the 10-day moving average is going to be up in the low 660s on Monday. So must hold support now is the low of this consolidation of 490. And if we break 490, we know lower lows are coming. Very strong uptrend. And back testing and holding the upper Bollinger Band weekly support. That's a great sign. Update that weekly support this coming week. And we can see resistance aside from 825, the high of this move. We've got 925, $10 even looking back at 2014. So the bulls are out in force, higher lows and higher highs, consolidating, back testing, holding the upper Bollinger Band support, maintaining breakout mode on the weekly time frame, and we'll see if the bulls can continue this bounce off the middle Bollinger Band. After holding that level once, it would be a red flag to lose the middle Bollinger Band support from here. So CBIS, I ripped apart the financials, very scary financials for long-term bulls, bouncing above the upper Bollinger Band support, still seeing a lower high pattern, and we've seen that now 7-8 days in a row. So 7-6, 7-2-4, 6-5, 6-1, 5-6, 5-2, 5 even. Bulls need to break this lower high pattern, confirm this bullish candlestick on Monday, and see a nice strong close above 5 cents by the end of the day. So it's normal consolidation at this point. The high volume on Thursday was bulls buying the dip with that lower wick, but we must see the bulls turn it around and head back up towards the recent highs of 7 cents. And here's one looking at the long-term trend where you don't want to be investing, you want to be trading. Look at the high of 2014, 30 cents, and here we are, nowhere near. And this is my example again. Volume in 2014, 430 million shares traded, took the price 300%. Now we've got volume of 700 million, 3 times that volume. Take that back, twice as much volume, and not seeing anywhere near the price back then. That tells me that a lot more shares have hit the outstanding shares of this company. It is a very clear change in the trend, but in terms of getting back to 2014 highs, unless we see hundreds of millions of dollars pour into the stock, it's not going to happen. So keep this in a trading mindset. Must hold support is 358, and the bulls need to get back in the 5-cent range on Monday. Last one here, MJN.V. Thank you, everybody, for tuning in here. And there's certainly going to be more coverage of this sector in the future, although I am looking forward, like I said, to those more legitimate plays, and we'll see these Canadian plays stand out as legitimate with their long-term uptrends on the weekly time frames. So MJN.V maintaining higher lows of consolidation. 113 is a double bottom of consolidation, and then we've got 115 and 119. Bulls want to see a clear break of 128 and 131 after sideways trading. This is another one that's a very tight range, and we're going to see a very clear break early next week. A break of 128 is bullish, and we're heading back to 135, and a break of 115, make that 113, that little double low, is a very clear bearish break that we're heading to further downside. Weekly time frame, blue sky breakouts, looking great. Another Canadian name in blue sky breakout. Healthy consolidation on the weekly time frame. Sideways trading, waiting for moving averages to catch up, cooling off a little bit. And again, a clear break of 113 means further consolidation is coming. And a clear break of 128 means we're heading back to test recent highs. This is a good looking name in the long term. You want the trend in your favor, and blue sky breakout is ideal scenario for the bulls. All right, thanks everybody for tuning in. I will put this recorded somewhere. We'll see if it's going to be the whole 2 hours, or if maybe I'll separate the slides from this chart coverage at the end. Either way, I appreciate you tuning in, and there's going to be a lot more coverage of this sector over the next decade, and I will be all over it. I appreciate you watching. Have a wonderful rest of your weekend.